Hey YouTube, it's September 7th, 2017, and this is a weekly chart of the dollar index. Let's go back to the daily so we can take a look at where some of the things needed to be reframed or reset. So this point right here, the lower end of the box, 11,850, I was looking at this area as a higher low potentially, but it was overtaken. I should say these daily candles right here were overtaken with the aggressive selling going on and violating these supportive points, and each successive low was a lower low. And you can see as I'm talking, price is just riding straight through my S2 support 2. So when these kinds of things don't happen in my favor, I was getting more bullish on the dollar. I thought there could be a top in place in the euro dollar. It just proves that you can't call tops, but you have to just stick with the trend. So the trend lines definitely would have worked, and the moving average is still distant from price at this moment. So let's look at the weekly chart. The weeklies are showing stronger buyers between 11,696, it's the lower end of the box. So May 2015, April 2016, and there, that one right there, June of 2016. There were some rallies that occurred in the euro, and the dollar snapped back very quickly. So I was short the euro here and wrote it for the majority of the year, and I was trading with FXCM back then. It was a very good trade. So you can see why these retracements can work out in my favor. I mean, a retracement where the dollar goes down and then you buy it on some intense demand and just let it go back up. So the next few charts, I'm just going to have locations of support that are much lower, and they are drawn on higher time frames, that to eliminate some of the noise of just expecting the dollar to come back up here, this location, and just thinking that the trend has run its course, but it's definitely not the case. So we can see how this all plays out in the euro dollar as well. So this is the hourly chart of the euro dollar, and it's clearly breaking through the previous highs as we speak right now. The August 29th highs just completely ripped above it, and I have the next resist point at 120.997. So we'll see what happens. Right now it's trading between these 2 points. There, I just went to the daily chart, and there's really no end in sight. Keep on going back in time. Just have to look to the higher points in the chart to reset it, and hopefully be long the euro dollar, or just find a way of getting a better price point. There, this is the Aussie on the daily time frame. It's just been beasting. It's from this low right here on April 15th, or I should say August 15th, 287 points. So there is a location far away from it where it's at 81.50 is very strong resist. So it's far away. It's still bullish. There's no reason to short it at the moment, but we'll see what happens. Sentiment really has a tendency of driving things. So this chart right here, it's of the Canadian dollar, and there was the last support point I had at 121.489. It has moved since then. This is just fresh from today. It's gone down another 83 pips, 92 pips, and this support zone that I have right here comes from that last chart I had on the blog for 120 base potential. So you have this arch in the move right here. This is the little bit below the midpoint, and there could be a base at 120. So we're getting close to scratching this 120 level, and it's just charging down on the 6-hour chart, just relentless, and that's how it's traded. I would have loved to have been short the dollar against the Canadian dollar. Any of the Canadian dollar bulls, congrats to you. You had a pretty good trade. So this is how I manage risk. I was able to get short the dollar yen at this location, that location, and I had a stop. I'll show you where I put it. It was right above right here. So I wasn't risking too much, and I was able to add to the trade where I got out here, and I also got out here too. So this 108.25 is my supportive zone where I was looking for some buyers to come in, and it seems like it's trending down at the moment on the 1-hour chart. And let's look at the daily chart too. it's trending down, the yen is getting very strong. So like the video I made last week, the location where I said I thought the selling could begin is right above 21,923. So that would have been the short entry. If you remember, when I colored the box, I colored it red to show a divergence in the trend. Let's go back to the same color. There it is. And there was the base of the move and the support point at 20,500. So price has been acting very badly for the bulls from the 4th. So you have these consecutive closes that are all negative. You have this little bit of a pause, so it's in some way of consolidating right here where it appears like chop. So on this 1 hour time frame, it's chopping, and it has first signs of penetrating this 21,750. So right below here, there's really not too many strong buyers. Let's color that black, like that. And so once it violates, it's just, there's a pocket of air between this point and possibly this 21,500 even. So for the SPX or the EX, or ES I should say, the zones I I drew above here, 2470. The candles are still consolidating, and this one is very slow to act. This high wave candlestick formation is indecisive. The close is almost the same as the open, and you have consolidation right here. So you have the initial drop down, the snapback, consolidation, and the secondary push lower. So this just could be a continuation of this thrust right there, where it's headed towards 2410. So there's a likelihood that it can head towards 2410. This candle right here is bearish, and this one too. So this all coincides with higher volume. So you have a volume spike going on, the high wave, another volume increase here where the shooting star took place, and the volume is starting to pick up. And the day hasn't even fully started in the US yet. So if that's the case and you see higher volume and a sell-off, we can start to log more distribution days into the count. So we would take the past month of trading and see where the sellers are stepping in and where they increase their selling pressure, like what locations, what prices. So if they're dumping stocks, you can see the time when they're doing it, and you can also see the corresponding price action. I like to look at other VIX products, not just the CBOE Market Volatility VIX Index, which is the S&P 500. This one's okay, and it's how I do my cycle studies. So you can see the cycle low to an interim peak, and then another cycle low to the gap, which you could just fill that in with the green bullish candle. Even though the gap wasn't totally filled, it might work for now. So 1155 was the close, and it's just right in the middle of that range. So you can see that prices are starting to average somewhat higher. These are all-time lows for the VIX, so there is some expectation that VIX can continue to trend higher. On this chart, it's not really too different from the VIX index, except it's just sloping down because the way that the product was created was to just deteriorate, and that's just how it's built. So you have, again, the same type of situation where prices are coiling up. These are the free real body candles where they're just going up, and there's really a lot of direction there, but you can see when it coils, I wrote about this on the blog, that when it coils, it has a tendency of breaking out. So you have this consolidation and then a breakout tomorrow. So there would have to be some kind of event going on. We'll see how the market trades, but right now it's at 47.36 on VXM. And this one too, TVIX. It's the range was only 90 cents. The entire range of all the trading going on today was 90 cents. From the 5th of September, 2 days ago, it was $2.56. So this is just very tight activity going on. If we look in the after hours, it's just up a little bit, hardly changed. Well, it's not Friday yet, and I'm looking at a stronger yen, just seeing by the charts that a lot of the highs end up coming in as lower versions. So you have the move from here, December of 2016, every consecutive high was taken out. So this is the dollar getting weaker, the yen getting stronger, and it's below my support point right here. And I'm eyeing where there was a lot of order flow going on right here. This is a potential support point where I would like to cover. Let's take a look at the distance between these two, 222 pips. Also, in technical analysis, former resistance becomes support. So there's another resist area right here, and the yen is just so strong that when it comes down to 105, that would be a good area to cover. By the way, I don't think that this will happen right away. I'm waiting for the yen to come back up right here in the middle of this trading zone between the 7th and the 8th. I'm waiting for it to come back. So that's what I have for you today. Good luck trading and take care.